Good evening, everyone. Welcome in joining our live sharing session tonight. Here we will continue to share some basic knowledge and important concepts of the stock market, as well as how to better understand and participate in these stock investments. Whether you are a newcomer who has just entered the stock market or an experienced one, I believe today's sharing will bring you new gains and inspirations. Tonight, I will continue to introduce the progress and the arrangements related to the second phase of entering the Asia Pacific Regional Headquarters competition. Of course, the market we are currently involved in is only the stock market in India. The stock market is an important component of the economy, affects the overall economic operations and development of the entire society. As investors, if we can flexibly grasp the major profit opportunities in the stock market, it will not only help us better understand the economic and financial fields, but also help us achieve our wealth goals, which is a win-win situation. During the learning process, if anyone have questions or wants to share their thoughts and experiences, please feel free to raise them, and I will try my best to provide answers after the class. Okay, so now let's move on to the sharing segment and the contents that we're going to be going over this evening. So for this evening's contents, as you can see here, regarding the contents to be shared tonight, compared to previous sharing sessions, I've made some small adjustments. Now, why make these adjustments? Perhaps some people have already guessed. Just yesterday, a very significant event occurred in the international financial field, which can be said to have the potential to impact the global financial markets. Although the reactions in various markets are not completely consistent, therefore, I will share the significant event with everyone first. In addition, regarding the wealth growth plan, the most important thing for the next 2 months or so, this will ultimately determine how much profit everyone can make, which is a crucial matter, as well as if everyone can make even more money. Then the asset management scale in our Indian region will definitely become extremely large, which is one of the decisive factors that will influence the selection of the Asia Pacific headquarters location in our Indian region. Therefore, our Indian team will definitely work hard to help everyone achieve greater profits so that we can secure the final victory in the competition for the headquarters location. At the same time, we're going to continue to learn from the experiences of international top trading masters and beneficial experiences, ideas, or methods and techniques from their investment cases. So without any further delay, let's continue to share the contents of this evening. Okay, so as I mentioned earlier, we made a slight adjustment to tonight's sharing content. The adjustment involves presenting the news first in advance. So just yesterday, there was a significant event in the international financial sector that could potentially impact global financial markets. It's important is worth prioritizing for this evening for everyone, but what exactly is it? So some of you might have guessed, some of you might not have, but that's okay. If you've guessed it, it just shows that you have a keen sense of the market and you're quite updated with the daily news. For those who haven't guessed it, don't worry, we're going to jump right into it. Now, let me explain why I insist on sharing news, financial data, and other fundamental aspects with everyone. In the short term, you may not see the significance, but fundamental analysis is crucial for stock traders. It aids in value investing, long-term investments, risk management, decision making, and identifying investment opportunities, and is an essential tool for investors in the stock trading. Okay, so this is considered to be a technical analysis. You need to be updated with daily news, what's happening globally, what's happening domestically. These are the things that are going to be helping you in the stock market. Okay, so the first piece of news, due to cooling domestic demand, U.S. consumer inflation is on a downward trend again. Now, this news may not seem significant at first glance, right? But do not underestimate it. Inflation is one of the very important data, especially at this stage, as one of the most important criteria for the Fed rate cut interest rates or when to cut interest rates. Now, because of the release of this data, there was significant volatility in the US stock market yesterday. So we'll talk about that in a moment. First, let's take a look at this data. The data shows consumer prices in the US rose less than expected in April, indicating that inflation is resuming its downward trend at the beginning of the second quarter, boosting financial market expectations of a rate cut in September. Other data on Wednesday showed that retail sales last month unexpectedly remained flat, further enhancing hopes for the Fed to start a loosening cycle this year. Now, reports suggest that domestic demand is cooling, which will be welcomed by Fed officials as they try to achieve an economic soft landing. Now, Christopher Rupke, chief economist at FWB Bonds, said economic data is perfect, favorable for rate cuts. The country has not yet escaped the threat of inflation, but we can start to see the end of the woods. Now, the economist expects that with labor market cooling down, price pressures will ease this quarter and the inflation rate will gradually approach the Fed's target of 2%. Now, Chairman Jerome Powell said on Tuesday, I expect inflation to fall on a monthly basis to levels close to last year's lower readings. Now, financial markets sees a 73% chance of a rate cut in September, up from its 69% before the data was released. Now, some economists expect the Fed to start lowering borrowing costs in July. So, as I've mentioned before, once the Fed starts cutting rates, it's a big positive for the stock market. With this inflation data coming out and the rate cut not officially started yet, or the timing not announced, U.S. stocks are already soaring. And today, Asian markets, including our Indian market, are showing very good performance. So this will actually be a morale boost for the Indian stock market, which has been quite weak in the past. Okay, so next piece that I wanted to go over. So since the release of the U.S. inflation data on Wednesday, the U.S. stock market has soared significantly, with all three major U.S. indexes hitting new highs. Among them, the NASDAQ index has shown the largest increase. So tonight we must take a look at the U.S. stock market together. But today we're not going to discuss the NASDAQ index, which has the largest increase, but we're going to analyze the most representative, the S&P 500 index. Now, I've mentioned before about the difference among these three major US indexes. So tonight, I'm not going to elaborate on that, and I will directly just jump into the S&P 500 index. To make it easier for everyone, to see the current trend of the index more clearly, I did not choose a larger time frame for this chart. So strictly speaking, currently, the S&P 500 index is in a process of the fifth wave of upward movement. Now, this is proprietary concept in the wave theory, and the fifth wave often shows more outstanding performance. So let's not discuss the wave theory for now, but let's take a look at the market performance from yesterday. So yesterday, the S&P 500 index clearly broke through the high point of March. When it comes to breakthroughs, we often think about distinguishing between true breakthroughs and false ones. Now, looking at this breakthrough of the S&P 500 index, the probability of a true breakthrough is very high. Now, you may ask why. So first, the previous trading day had a significant increase, and the candlestick had no lower shadow and very short upper shadows. This is a very strong characteristic. In addition, the body of the candlestick is relatively long. Now, such a candlestick indicates that since the open of the previous trading day, the market has dominated by bulls throughout the day with no room for any retreat. Now, this increase is caused by very bullish fundamental factors. And once this fundamental data is generated, it is unlikely to change. Why? Because this is national level data disclosure, and such data is unlikely to have any significant so-called errors. Now, I may have expressed it somewhat cryptically, but in essence, this data cannot be falsified. So a breakthrough like the S&P 500s is likely a true breakthrough. At most, after the breakthrough, there may be a slight pullback confirmation in the following days, and then the market will likely continue to move upwards. So regardless of how much impact this rise in the US stock market will have on other region and country stock markets, it will at least improve market sentiment somewhat. Now, of course, the Indian market has its own unique characteristics, which we're going to be going over as well later on. So next, we want to take a look at relevant economic data from India again. So India's good trade deficit. So according to government data released on Wednesday, showed the economic growth in April exceeded expectations due to a decline in exports and a significant increase in gold imports. Now, according to Reuters calculations, India's good trade deficit in April was 19.1 billion, higher than the economists expected 17.23 billion. That's almost 2 billion, right? In March, it was 15.6 billion. Now, government data indicates that India exports of goods in April were 34.99 billion, while imports were 54.09 billion. In March, exports were 41.68 billion and imports was 57.28 billion. Now, typically when a country or entity's trade deficit expands, it implies that a higher dependency on external resources and goods. If a large amount of goods and services needs to be imported from abroad, it could make a country more sensitive to fluctuations and changes in the international market, so increasing its economic risks. However, what is significant here is that India's expanding trade deficit does not necessarily mean a high dependence on importing a large number of goods and services abroad. Instead, in April, service exports were $29.57 billion and imports were $16.97 billion. In March, they were 28.54 billion and 50.84 billion respectively. Now, this data indicates that at least the trade deficit is unrelated to the need for services. So why India's trade deficit to expand? One of the answer lies in gold. In April, gold imports more than doubled to 3.11 billion. Compared to 1.53 billion in March. Now, generally, a sustained expansion of countries' trade deficit is not a good sign for the economy. But in this case, this data is due to a significant impact from a particular factor, such as gold imports, which will not affect India's overall economic performance. At least for now, India's economic development remains very healthy and vibrant. So I always advise everyone to approach issues with an open perspective. Okay, so that is the news and updates that I got going on for this evening. Next, we're going to be going into our market recap. So let's take a look back at the domestic market of India today. Looking at the performance of the market today, what kind of thoughts and feelings do you have? Do you get a feeling like your heart's racing for excitement? Is it stressed out? Now, regardless of the reasons, the fluctuations in the market today are particularly huge. Whether it was the Nifty 50 index or the Sensex index, the intraday price drop was already swallowed up the previous 2.5 trading day gains. When it fell to this point, it definitely made a lot of investors in the market feel stressed out. So don't feel surprised. After 2 o'clock in the afternoon, the market suddenly turned around, changing from a decline to a rise. Not only did it completely recover all the intraday losses, but it also rose significantly itself. In the end, both indices closed with an increase of around 1%. Now, that has left a lot of people astonished. So next, let's take a look at specific situations of the Nifty 50 index and the Sensex index themselves. All right, so we're going to start off with the Nifty 50. Now, I've already introduced the general trend of the index to everyone just now. Now, in short, today was an eventful day, with the index fluctuating greatly up and down to the point where it can be described as a V-shaped reversal occurring within the same day. Now, it should be noted that the unexpected downturn before 2 p.m. was quite surprising. Now, why do I say this? As we mentioned when sharing major news earlier, the positive turnaround in U.S. inflation data yesterday led the market to be optimistic that the Federal Reserve would cut interest rates in September. Now, stimulated by all this data, all three major U.S. indices hit record highs. Typically, such external market conditions should provide a positive stimulus to the Indian market, even if the Indian market might not rise due to its unique situation. It shouldn't have fallen by this much. However, the reality is that the first half, the Indian market experienced significant decline, and the drop was quite substantial. So here I want to tell everyone that the market is neither completely predictable nor completely controllable. The only thing that's for certainty in the market is uncertainty. So never be so fixed on a certain viewpoint that you cannot change and pivot. Now, ultimately, by closing, the Indian market not only recovered from its decline, but it also had enough strength to rally further, which can be seen as a positive response to the international markets. Now, due to the increased expectations of U.S. interest rate cut and the fact that most representative U.S. stocks index, the S&P 500, has started to break higher, this is very favorable development for the global stock markets. Now, does this mean that the Indian market will continue to rise smoothly? Not necessarily, right? As the Indian stock market is still influenced by uncertainty related to the elections and significant selling of stocks by the FIIs, our foreign institutional investors. So for the Indian market, it is currently a state of mixed sentiments. The index may experience some upward volatility, but the profitability of the market will not necessarily be promising. Now, for regular traders in the market, strong investors may consider trying out with a small position, but for us, it is not necessary at all, as a risk-reward ratio is just not favorable, especially when we have other trading opportunities with more certain profits and larger profit margins. If the index continues to rebound in the upcoming days, we will mainly focus on selling our stocks on rallies. Okay, next, Sensex. So let's continue to look at the Sensex, right? This index is more or less the same as the Nifty 50 index. So today the index hit a low point, just touching the lower uptrend line. When experienced a significant rebound, the index closed today with a nearly 1% increase. So regarding this index, the viewpoint is quite consistent with that of the Nifty 50 index. The market is likely to continue to rebound, but the volatile manner. Under this trend, the potential for making money in the market may be relatively poor. We still do not recommend excessive involvement in trading ordinary stocks, as this could lead to small gains and big losses. So the risk versus reward is just not there. Now, currently, the index is still operating within an upward channel, maintaining a trend of oscillating upward movement. For the Sensex index, the technical resistance is in the range of 73,008 to 73,009. There shouldn't be any significant downturn in the short term, mostly just oscillations, and this viewpoint similarly applies to the Nifty 50 index as well. All right, so the above is the comprehensive analysis of the Nifty 50 index and the Sensex index today. I hope it was helpful to everyone. But we're going to be moving on. So next, I'm going to continue the next part of our content, our wealth growth plan. Okay, so for all my members, for all my friends, for all our followers, as you know, our wealth growth plan is actually part of a process to compete as the Asia Pacific headquarters. It is a plan designed to help all members achieve wealth growth in a complementary manner. So it's complementary. In order for everyone's profits to grow more rapidly and for the asset management scale in our Indian region to further expand in an orderly manner, I have been in discussions with relevant collaborating institutions recently to explore cooperations in various aspects, including today during the morning, which have mainly been spent in discussions. Now, many people have expressed their hope that they can bring better news to everyone. Actually, to be honest, there are no issues with that. However, we must proceed everything step by step, executing according to the plan and in stages. The result of today's discussions have indeed been quite smooth, and we achieved a series of better specific cooperation. Now, regarding the concerns about purchasing shares, we have also made certain progress. We have indeed obtained more shares and better terms, although progress has been made in the discussions. Now, there are still some specific arrangements to be made within our company, so in the next few days, we will conduct internal research and arrangements first. How will it be specifically arranged? How to ensure that everyone gains relevant profits while ensuring the steady progress of our wealth growth plan? We're going to be coming up with a specific plan, so I believe the plan will be disclosed at the latest by Monday evening. So here I would like to clarify that as long as you're participating in the wealth growth plan, regardless of whether you are a long-standing member or a new member, I treat everyone equally and I ensure that everyone can earn corresponding and sufficient profits. So rest assured about this and stay tuned for more information. Okay, so today is already Thursday. Another week will soon pass. So since last week and this week, we have been leading everyone in stock trading. We have also achieved some profit results. So in the past 4 trading days, we have achieved a profit of nearly 40%. As long as the block trading deals purchased today, it is expected to have a profit of over 15% tomorrow. So in this way, it could seem that our profit is 55% for the week. So let me ask you, with such profit speed, what do you think about our wealth growth plan eventually achieving a profit of 300 to 500%? Now I can tell you for sure that this evening earning speed is not our fastest. Many of our old members who have followed us should be very, very clear about this. I can also tell you that in order to ensure that our wealth growth plan can truly achieve its goals and even exceed expectations, we will definitely have more and bigger profit projects. Of course, these projects are still in negotiation stage, partly due to the confidentiality reasons. The formal contracts have not been signed yet, so I'm not going to reveal them to you for now. However, one thing can be for certain, and that is you can be resting assured that when the execution is real, I will definitely inform you in advance and make proper arrangements. So here I want to emphasize once again that everyone must follow the trading instructions and other related arrangements during the trading process. Only when everyone's execution is improving can our trading become smoother. This is a proactive cycle. So do you understand this point? All right. So about the content that we just discussed, if anyone has questions or areas of confusion, please feel free to further contact my assistant. Now, during the last live stream session, we talked about some stories related to the speculation king, George Soros. And some members even told me they really enjoyed listening to such stories. Now, understanding the deeds of masters is not just about telling or listening to stories. We always need to learn some helpful concept, experiences, or techniques from these deeds of masters and classic cases. As an investor or trader in the financial market, our only goal is how to quickly and steadily increase our wealth. Now, it can be said that pursuing profits is our only goal. We do not need to make any judgments about the masters, and moreover, we're not qualified enough to do so. So let's cut to the chase. Tonight, I will share some of Soros' past trading cases, which include successes and failures. We're not going to focus too much on the results, but rather hope to learn something from these guys. All right? Okay, so starting with the first one, the man who defeated the Bank of England, Soros. So on Wednesday, September 16th, 1992, this day was destined to go down in financial history and also destined to become the darkest day in the British financial market. On this day, a Hungarian Jewish immigrant from a poor background who barely completed the economics course at the London School of Economics made a humongous profit of $1 billion by shorting the pound sterling and famously broke the Bank of England. Note that this $1 billion back in 1992 is a lot different than it is now. It had significantly different purchasing power compared to the present day dollar. This is our guy, George Soros. As for the causes and consequences of this event, why Soros targeted the pound, and so forth. So I'm not going to go into detail why. I believe many people here are already familiar with it, and those who don't know can look up some of this information by themselves, right? Now, at the time, this could be described as a financial war, in which speculators firmly believed that the British government could not maintain a high interest rate. The depreciation of the pound was an inevitable trend, and the British government would inevitably withdraw from the European exchange rate mechanisms. Eventually, this exchange rate battle ended with a victory for the pound bearers. Now, Soros became the biggest winner in this attack on the pound. His photo appeared in major magazines, and he dubbed as the man who broke the Bank of England. Soros sold $7 billion worth of pounds in this bold gamble. And he bought $6 billion worth of other strong currencies, such as German marks. Additionally, considering the depreciation or the appreciation of a country's currency usually leads to the rise or the fall in a country's stock market. So Soros bought $500 million worth of British stocks and sold German stocks. So Soros emerged as the biggest winner of this pound shorting operation. He made nearly $1 billion in profits from his pound short trades, and his long positions on interest rate futures in the UK, France, and Germany, coupled with short positions on the Italian lira, brought his total profits to an impressive $2 billion. Now, of this, Soros personally pocketed a third, netting him $650 billion. It was this pound shorting that made Soros famous in one stroke. Perhaps his success alone wouldn't have prompted me to share this story with you. So, in fact, there is a tale behind this event, which even reveals Soros' investment style and related beliefs. So, what exactly is it? Let's continue to go. Now, in 1988, Soros hired a guy named Stanley Druckenmiller to handle daily trading while Soros focused on managing his charitable work. So this next topic is going to be, if the logic is impeccable, why not go all out? Why not go all in? Now, under Druckenmiller's management in 1989, the quantum fund rose by 31.5%, and the following 4 years, the quantum fund increased by 29.6%. 53.4%, 68.8%, and 63.2%. So every year it's gradually going higher and higher and higher. So in September 1992, Soros and Druckenmiller made a bold bet on the devaluation of the British pound, making a profit of 1 billion US dollars. Now, since this story has been told countless times, I'm not going to do it one more time. By November, another fund manager of Soros, Robert Johnson, using almost the same strategy in a similar battle, once again earned 1 billion US dollars for the quantum fund. This time, the target of the short was the Swedish krona. So in both of these Forex attacks, Soros made extremely high bets. He raised a total of 15 billion US dollars to bet on the pound falling. When Druckenmiller reported the positions to him, his response was, if the logic is flawless, why don't we go all out or go all in? So when Soros believes he is right, there is hardly any other investors who can bet bigger than him. Now, this aligns with another famous quote of his: if the odds are greatly in your favor on a bet, then you got to bet big. Having confidence or a small position is not going to help. So this also tells us that when a significant profit opportunity with certainty appears, only by going all in can one achieve a qualitative leap in wealth. So let's take another look at another story or another feat of Soros. So in 1997, most Southeast Asian countries were immersed in the feast of asset appreciation. And of course, the short selling would not miss the numbing opportunity. Due to the good circulation of the Thai baht in various Southeast Asian countries, low risk and huge asset bubble, it quickly became the target. After the Bank of Thailand announced the existence of liquidity problems in their domestic financial institutions, Soros began to sell a large amount of related stocks that had previously bought, triggering a run on the Thai baht domestically. Shortly after, he began to sell the Thai baht in large quantities. However, just when the situation of the Thai baht seemed somewhat uncontrollable, the Bank of Thailand announced the abandonment of the fixed exchange rate mechanism and the implementation of a floating exchange rate mechanism. On this day of the announcement, the Thai baht plummeted over 17% against the US dollar. The Philippine peso, Indonesian rupiah, the Malaysian ringgit also all succumbed to the impact of the Thai baht. Now, Soros and his fellow interest sharers once again reaped substantial profits. Soros' ability to capture significant opportunities is also amazingly outstanding. So, after seizing the opportunity, he dares to strike with full force. I think it is this kind of courage that enables him to achieve his current wealth and his status. Okay, so that was the Thai baht. He crushed. He broke the Bank of England. So he's got a keen eye on shorting these currencies. And as I said previously before, if you have a good intuition and you can back it up with indicators and research, you can confidently bet on it. Now, this time, the attack was on Hong Kong, which is also one of the few failures in Soros' investment career. After sweeping through Southeast Asia, Soros turned his attention to Hong Kong. Now, he was very, very close to succeeding, but he ended up failing. In mid-July 1997, Soros launched a similar attack on Hong Kong using similar tactics. The Hong Kong dollar was subjected to massive speculative selling, causing the US exchange rate to drop to around 7.75% Hong Kong dollars per US dollar, creating chaos in the financial markets. However, just as Soros was about to profit, what Soros did not expect was that the Hong Kong received unprecedented support from the Chinese central government. Hong Kong was granted control over the national foreign exchange reserves. So while the Hong Kong Monetary Authority significantly raised short-term interest rates, Interbank overnight lending rates surged, increasing Soros' speculative costs. And in the end, under pressure of continuous suppression, Soros failed and he took his exit. So even Soros can see when he's about to lose, he could pivot and he could get out of his position, right? This is called stop loss. Now, although Soros ultimately failed to succeed, it is a testament of the strength of these masters' abilities. This battle can be even seen as a confrontation against both a country and a region. Now, although China's strength at the time was far from as powerful as it is now, it was still a major Eastern power. So Soros being able to attack and counterbalance is quite remarkable. Now, some might wonder, a master also experiences failures. How is that even possible? So I want to tell you that this failure is not the only one in George Soros' life. But so what? This does not diminish the achievements of him. I think one of the biggest differences between a master and an ordinary person is their attitude towards failure, their grit to get back up and get back in the game. You know, failing is okay. Making mistakes is okay. You just have to pick yourself back up and then you have to get back on track. Now, I just said that the Hong Kong project failed, but it was not only failure in George Soros' investment career. In 1987, a global stock market experienced a Black Monday. Soros chose to go long on US stocks and short the Japanese stocks. The result was a huge loss. Within less than 2 weeks, the quantum fund lost a staggering $840 million. Soros decided to admit his mistake and change directions to retreat from battle. And in his own words, I am successful because I know when I am wrong. I have survived mostly by realizing my mistakes. We should understand that humans are going to be like this. It's not shameful to be wrong, but it's shameful not to correct your mistakes, which is 100% correct. So guys, this is a key point. It's not shameful to be wrong, but it's shameful to not correct yourself. Do you think Soros' failures or mistakes just ended there? Of course not. The first half of 1999, internet tech stocks in the US NASDAQ soared their prices and quickly skyrocketed. Now, Soros' Quantum Fund and Julian Robertson's Tiger Fund both realized that the bubble was unsustainable. So they almost simultaneously started shorting tech stocks. Unexpectedly, in the second half of 1999, tech stock prices continued to rise, causing significant losses for the two big funds. Now next, the Tiger Fund persisted in shorting, resulting in increasing severe losses. In 1999, it suffered a 19% loss and faced continuous redemptions from investors, causing the fund's size to shrink dramatically from $23 billion to about $6 billion. Now, in contrast, the Quantum Fund recognized the unfavorable trend, so it quickly turned it all around. Went long in the past few months of 1999, not quickly making up more than the losses of that year, but also making a huge profit of 35%. So, everyone, can you understand the significance behind this? So, you decided to go with a strategy, you had a trading plan implemented, and then you see the market doing something completely different. You know, instead of panicking and deciding to hold it for long, he takes a loss temporarily, and then he does what the market wants him to do. So the other Tigers Fund was at a 19% loss by the end of this. George Soros realized his mistake, pivoted 180, and went straight the other direction. And not only did he make back up for all his loss, he ended up making 35%, which is amazing. Okay, so everyone, I want to share some classic cases related to George Soros's with you. Now, the purpose is not to just tell stories. We should learn something useful from them. In our investment career, only by constantly learning can we make continuous progress. So I always say the day that you think you're the best, the day you cannot learn anymore is the day that everybody surpasses you, right? Now, from George Soros, these cases, today we can learn at least two fundamental things. The first one, if the logic is flawless, why not go all out or all in? Usually, the more significant the profit opportunity, the less likely it is to be encountered again. Such opportunities are more precious, and many opportunities may only come once or maybe twice in a lifetime. So, for ordinary investors, seizing an opportunity can be even life-changing. Now, just like the current situation in the Indian stock market, when the future of India's economy or stock market reaches a bottleneck, the stock market may not be the same as it is now, or even like the bull market trends of the past 1 or 2 decades. How many times in one's life can you encounter such opportunities? So let me add our wealth growth plan. It only happens once a year, right? So second point, the market is ever changing, and even masters like Soros cannot avoid making trading errors. So if we make 1 or 2 trading mistakes, it's not a terrifying thing at all. And there's no need to dwell on it. There's no need to keep thinking about it. Mistakes are not scary. They're not shameful at all. What's important is we correct them immediately after we discover our mistake. Now, of course, I share these contents with you in the hope that everyone can maintain caution and flexibility in real life trading. Go all out, but not blindly. Allocate resources reasonably. Maintain mental health and seek support from the team. Only in this way can we truly achieve our wealth goals and dreams when facing uncertainty and challenges. Okay? So, quite basic, right? So, if you get an opportunity of a lifetime, why are you going to be holding back? Now, that doesn't mean that we follow blindly, but if all the information is correct, we got to follow our gut because this might not come back around for a long time. Number 2, if you own up to your mistakes and you can pivot and adapt to the new direction, it is going to save you so much heartache. It's going to save you so much time. It's going to save you so much money. So learning to adapt is very, very crucial, right? Wow. Okay, stock analysis. So this is where we track and analyze the stocks that we've recommended to everyone before. So today's market can be described as a fierce counterattack, right? And the stocks we recommended earlier have all performed quite well, with some stocks rising by about 8%. Now, previously, I have always mentioned that the stocks we recommend are high quality stocks. Although they may adjust with the overall market, as long as there is a slight rebound in the market, these high quality stocks are likely to resume their upward trend. And some stocks may even show a more robust performance. We still adhere to our consistent stance. As long as it is a stock we have recommended, we will continue to track it. And we will take responsibility until the very end. Whether it is declining or rebounding, we will continue to monitor it so you can rest assured about this. Now, regardless of the final profit or loss of all the stocks recommended to everyone, if there is indeed a loss, our wealth growth plan will guide you to quickly recover. So without further delays, let's take a look. Okay, first one, LT. So today, this stock has shown a rebound trend and has rebounded continuously now for 4 trading days. The short-term rebound amplitude is already relatively large. Will this kind of rebound stop at any time? I truly think it's unlikely. However, under normal circumstances, the stock may rebound to the price range near April 19th for consolidation or a slight pullback and then continue to rise. Now, we are quite confident in the resumption of the normal uptrend of the stock. Now, why do I say so? So, firstly, since the decline from the peak in the early April, the stock has completed a complete ABC correction structure, meaning that this correction structure has ended. So after the end, the stock's price did not consolidate, but instead showed a strong rebound. Therefore, we expect that the stock is likely to resume the normal uptrend. The starting point of the rebound of the stock is near the low point in February this year, meaning it found support at the previous lows. The road to rebound cannot be completed in one step. So for this stock, we're going to be continuing to hold. Okay? So, as I've said, this is one of these long-term bullish stock trends. We just have to be patient, and these rebounds are starting. Okay, so next, let's take a look at the stock NCC. So, there's not really much to say about the stock. The rebound today is close to 9%, and the stock price has basically reached near the previous highs. So, the next question is, when will it break through, and how will it break through? So from today's trend, due to significant increase during the day, with this kind of upward trend, generally there will be a momentum for further increase tomorrow. So even if a new all-time high is reached tomorrow, I won't find it strange. At this current situation where the stock has arrived, there is actually a technical aspect that people need to learn about, which I've introduced before. I wonder if you all still remember. It's about the beginning of this rebound, where the price dropped earlier, retracing back to near the trend line. At the time when the decline stabilized, there were two bottom probing and rebounding candlesticks on the chart. Now, do you all remember how I explained it back then? I was reminding everyone to remember these technical patterns. The stock is in good shape and is facing a breakthrough upwards. So let's keep a close eye on it. Of course, if the market can provide us a decent profit after the breakthrough, we can also consider exiting at the high. So this is looking really good. If we end up breaking through, we can start planning to sell. So make sure you stay tuned. When we say it's time to sell, we're going to be selling. Okay, last one. We're going to take a look at Capacite. So let's take a look at Capacite. Once again, it rebounded today for a third consecutive trading day. Now, we've talked about this stock many times before. Today, without discussing other aspects, let's focus on one key technical issue. What is the technical issue? It is that before the stock officially rebounded, it also had two candles with very long lower shadows and a clear sign of bottoming and rebounding momentum. Okay, everyone, when we talk about this, everyone should think of something, right? Do you remember what was just talked about right before this? When we talked about the NCC stock, we discussed before the strong upward rebound of the NCC stock, it had those two candlesticks with very long lower shadows. That is a classic technical pattern. I've also circled it for everybody to see. If you see these two long lower shadows, it is a very good indicator that the uptrend is coming, right? So everyone was asked to deeply study these classic technical patterns. This repeated learning work needs to continue so that you can quickly improve their practical and trading abilities. So that is going to wrap up our evening for tonight. But I want to express that no matter how much we're learning here, if you don't do reviews and you don't study by yourself, it's going to be hard for you to grasp and memorize all these information. Like these double bottom candlestick with the long shadows. It's a hammered out bottom. We can propel upwards a lot. So if you caught it early, You can even have an entry point there and then take a quick exit for the intraday trading. These things require repeatedly learning, repeatedly going back and reviewing and applying it to these graphs. All right, so that is it for this online course. Please, please, please go over all the content previously, memorize as much as you can, and then slowly, bit by bit, try it on your graph. Apply it into your real life trading strategies. Now, our next online broadcast is scheduled for Monday, the May 20th. So not Sunday, but we're going to be doing it on Monday at 8 p.m. I hope to see everyone here again. Thank you very much. If this is your first time or if you're a repeating member, thank you for your strong support, and I'll see you all next time.